Hello and welcome to this edition of Closing Trades and exactly the market that you want to see after a long weekend. Thanks to the global share and the leg up that we got, we've managed to hold on steady, a gap up, and now we're sitting at the high point of the day. And the global share as well has quite a lot to do with it. I mean, look at the kind of rally that you had in global markets on Monday. The way Asia actually lapped it up, even markets like Hong Kong and Shanghai finally managed to eke out gains and close in quite considerably off from the session lows. Europe has started off on a big move, over a 300-point move coming in for the DAX, the Stock 600 higher by 1.25%, 1% of a move coming in for the FTSE, and that's holding true for the periphery markets as well as the broader indexes there as well. And we've managed to gain good ground, about 440 points higher, pretty much negated and undone all of those losses that we sat on from April 2nd, which is when the tariff announcement actually was officially made. So today you're really seeing that, risk-on trade really come back. Realty, automobiles, metals, these are the sectors which are actually the leaders. I mean, not to say there's, of course, strength from the leadership names like the banking spaces as well. But IndusInd Bank holding up 6.6% higher, L&T higher by 4.5%. Tata Motors has jumped up very smartly. You've got an Adani Enterprises, Adani Ports, Axis Bank, Geofinance. All these spaces are looking very, very buoyant. The breadth of the market as well is really picture perfect. Names like Motherson, Lodha, Sona Comstar. It's interesting to see that those tariff trades which were the most beaten down, they are the ones which are actually making a solid comeback. Companies with large, export exposure, they are the ones which are rebounding very, very smartly in trade, aren't they?
Absolutely, Aisha. But there's one surprise mover also in trade today. Take a look at Bharti Airtel because that one has hit a fresh record high level in today's trading session, almost 2.5% right now. At one point in time, it was trading higher by about 3.6% or so. You have BNP Paribas was saying that Bharti Airtel growing faster than the peers. This is due to the price hikes last year. They're maintaining an outperform stance. And they have a 2,000 rupees target coming in for Bharti Airtel. So surprise, surprise, you have a stock that has finally hit a record high level in such a market condition. You have HDFC Bank set for the best day in about 10 months or so. This after the deposit rate cuts. Remember, they've cut the savings interest rate by about 25 basis points. And you have a lot of other counters that are moving on back of that particular development. But let's understand the entire market construct. How should you construct your portfolio in such a given time? We have Devin Choksi as well as Kunal, both are joining us on the show. Very good afternoon to you, Devin, as well as Kunal. Thank you so much for joining us. And Devin, yes, it's a great market to be back to after this a long weekend or so, and it's a truncated week as well. While we've been resting, you have a lot of commentary coming in from the US markets, especially the exemptions coming in for some of the electronic products. Now today you have the fact that Trump is looking or mulling to give some sort of reprieve when you talk about auto tariffs as well. How should one digest all of these conflicting news flow at once?
Yeah, good afternoon. Well, the crude, the commodity, and the currency, all these three C's are working in favor of India at this point of time. With the lower cost of production promising the lower inflation, along with, I think, reduction in the rate of interest, they are adding into the sweet spot at this point of time. And that's where probably the larger amount of confidence coming in. As such, the domestic market per se, for most of the Indian businesses, they remain relatively resilient, relatively strong as far as the demand is concerned. Government is continuously spending money on building the infrastructure across, I think, all the under the PLI schemes. I think they continue to power and empower the respective companies, industries therein. So then we believe that I think overall opportunity-wise, the Indian market remains, I think, really strong. Maybe I think whatever we saw in the previous times where the FIs have been sailors and that created a larger amount of pressure in the market, that seems to be out at this point of time, with the dollar currency remaining slightly favorable to India at this point of time. So overall, with the tariff getting postponed and 3 C's and 2 I's, as we call it as, are working in favor of India, we believe that the market could re-rate. And the range of 21,800 on the downside probably, I think, is the bottom that market has formed as we see it. 23,800 on the Nifty on the upside, I think, is distinctly possible. So given that possibility, the market should remain relatively strong going forward.
Right, okay, that's the take coming in on the markets right now. Kunal, rejoicing with the rest of the globe, but it's a truncated week once again for us. So, what are we in store? Will we manage to hold on to the gains or build on to that in the coming few days?
The last two holidays, we've seen 350-point gap up for the index. So we should. So let's not. I would believe. Yeah, let's not jinx it. And I hope that this week and this long holiday is actually coming out as a boon for the markets. And I think the mood for the markets today is not just positive, of course, on the index front, but there are so many stocks and sectors which are making a very strong comeback. There is a very strong evidence of short covering across slew of sectors, and especially the ones which have been huge underperformers. I also like the fact that the FMCG stocks have taken a backseat today, because that indicates that the defensive tilt which was there in the market since the last 1 or 2 weeks, that's taking a bit of a rest, and the risk on appetite is coming back for the index. We should be looking out for at least 23,800 for the Nifty over the very near term, so which means that we are looking at a potential for the continuation of the up move what we've seen in the last couple of days.
In fact, talking about which way or the levels that the market is going to clock from here, Morgan Stanley has actually cut its sensex target for December end by 12% to 82,000 now. Why so? Varun is here with more details from that note.
Well, they have cut their price target for Sensex December 2025, and the new price target by Morgan Stanley is 82,000 versus the 93,000 that they previously had. So that's a 12% cut from the previous target, but yes, they still see a 9% upside from previous close on Sensex. Now they say that the level suggests that the BSE Sensex would trade at a trailing PE multiple of 23 times. Now if you look at the 25 years average, that is 21 times. So it is at a premium, and the premium actually justifies that they are still confident on Indian markets. But yes, they are lowering their GDP estimate for 2026 by 40 bips to 6.1%, and also they expect a slower recovery in 2027, that is 6.3% versus the 6.5% they have estimated before. They expect the inflation to be at 4% till 2026. Now the biggest worry because of which they have cut the overall GDP estimates is the global slowdown, which would actually impact Indian growth as well. And also for 2026, the earnings estimate is down by 13%, and also this is driven by the global situation. In the base case, the target is 82,000, the bull case target is 91,000 for Sensex, and the bear case target is 63,000. For the base case, they assume that the bulk of the tariff news is out, and they are expecting a 50 basis point rate cut by RBI. They expect the Sensex earning to compound at around 16% annually to FY28. They expect that India's potential trade deal with the US may take time, but yes, it will happen, and this will help India gain the overall share in US trade. Also, they say in sectors, if you look, they are overweight on financials, on consumers, on cyclicals and industrials, and underweight on energy, materials, utilities and healthcare. And they also say that they are cutting back on preferences for small cap and mid cap over large caps. But yes, they have trimmed the target for Sensex, but yes, still they see a 9% upside on Sensex.
All right, thank you so much for that, actually, Varun, for outlining what exactly Morgan Stanley has to say in its note, given the fact they are actually overweight on at least financial cyclicals as well as industrials. And that brings me to the next point, actually, Devin, given the fact that a lot of you have murmurs now, the fact that you should actually look at domestic oriented counters, and one of those such product that is actually seeing a very good up move today has to be Bharti Airtel, hitting the fresh record high level in today's trading session. Apart from telecom also being one of these domestic oriented counters that are looking at, are you also looking at this entire theme very closely, that you should look at stocks or the sectors that will benefit in what happens domestically?
Yes, indeed. I think relatively, more stable sectors in telecom and the data broadband, as we want to call them as. I think they are largely remaining, stable also because of the fact that the rollout of the 5G has already happened. Jio in particular is also rolling out different verticals as far as applications are concerned. In different verticals, they are rolling out applications. So that promises that on one end, they would be offering higher amount of data consumption for the enterprise level activity. And on the other end, they would be generating higher amount of transaction-based income due to different vertical-based solutions that they are providing across 7 or 8 different verticals on the Jio platform. So in my viewpoint, that calls for some amount of further investment into this space. And that's where probably both Bharti as well as Jio should be attracting higher investment. Of course, Jio is not separately listed, but it is not ruled out either that I think this financial year we should be seeing some news on this company getting separately listed and the allocation of fund coming into this space.
Okay, that's that on telecom, and clearly ruling the entire space is Bharti, now on its way already at 1800, and one of the brokerages is also quoting a price target of 2000 on Bharti up next. We will take a very quick break, continue analyzing markets on the other side.
Welcome back. You're watching Closing Trades on ET Now, and according to ET Now sources, the government is working on new measures to check the dumping of steel imports. This post the hike in the tariffs coming in by US administration. Prakash is here with more details on that. Prakash?
The government is planning to discourage steel dumping in the country, especially after the US government's decision to impose a 25% tariff on steel and aluminum products. That's an important development coming in. The Steel Ministry has held an important meeting with the stakeholders under current circumstances where several tariff and non-tariff measures are expected to be announced. We're given to understand that quality control orders will be expanded to curb cheap imports. In fact, almost all grades of steel will be covered under quality control orders. In fact, the process has been initiated. Currently, almost 2,000 grades of steel products are under quality control orders, and now the Steel Ministry is moving ahead with the fresh proposal. The industry has already approached the government. The issue has been discussed widely, and now the government is expected to announce several measures to regulate cheap imports. When it comes to tariff measures, imposition of safeguard duties on steel products from China and Vietnam is already under active discussion of the government, which will be announced very soon, where DGTR has made a recommendation to impose 12% duty on certain category of steel products.
Right, Prakash, we'll leave it at that. Also welcome on board Vinay Rajani to talk about what he's reading on the charts right now. Vinay, hi, afternoon. Let's talk about some of the underperforming sectors. Metals, IT, both extremely beaten down. Today, of course, they are seeing a rebound, but does it seem like it's going to last long?
Yeah, good afternoon and thanks for having me on the show. So yes, IT is obviously into a downtrend. It has made an attempt to recover from the lower level. But yes, there has been some signs that overall, looking at the ratio charts that we see. So if we do the ratio analysis of Nifty IT divided by Nifty, that ratio analysis says that Nifty IT has reached to the long-term support, and anytime soon it could find a bullish momentum. So as of now, there is no confirmation of bullish reversal as of yet. But the way things are panning out, the way market is sustaining at higher level, sector rotation will be there, and the sectors which they have not performed till now can participate in the coming days. And talking about the Nifty IT index, 33,800 is a level to watch out for on the for the Nifty IT index in this spot. So once that is taken out, we can expect a good amount of short covering in the IT stocks, and that will also participate. So I feel that this is not the right time to short the IT stocks. In fact, one can start accumulating the stocks because they are looking quite oversold, and ratio charts are suggesting that it could soon find its ground and will start outperforming the other sectors. So this is the time to accumulate the IT stocks, and metals are quite volatile. Metals have bounced back nicely from the lower level on the back of news. But yes, overall, I feel that on dips should be bought into, because overall the falling dollar index is a good sign for a metal sector. So that is going to provide support at lower levels. So buy on dips can be done in the metal stocks as well from here.
All right, so buy on dips, that's a strategy one can adopt when you talk about the metal stocks from here on. But Devin, I wanted to get your view on the realty space, one of the top sectoral performer in today's trading session. And looks like the tide is turning in favor of this particular sector. What's your view? How should one actually view this one? And should one actually go ahead and invest 5% up move in today's trading session?
So as long as the valuations are affordable, I think this particular space remains absolutely convincing and attractive enough, largely because of the fact that both on the low-cost housing side as well as I think the premium housing, in the entire spectrum, I think the demand remains upbeat and buoyant. And should the stock market remain comfortably at current levels, probably, I would think that the demand for the premium real estate, I think, would remain relatively on a higher side. So that's where probably I think the participation of some of the real estate developer companies, I think, who are basically focusing on the premium properties, that remains, I think, relatively high at this point of time. We believe that as long as the valuations do not scale up in hurry, I think this space would remain attractive enough for considering at every correction or at every fall in the market.
Okay, that's the take coming in on the realty names. In fact, let's bring up some of those realty winners today. I mean, everything from a Loda, Macrotech developers, that is, to a DLF, all these stocks are on a tear, and even the smaller players are the ones which are holding up very nicely, the likes of a DB Realty, etc. as well, looking very, very smart indeed. Kunal, any trade here within realty?
Yeah, DB Realty is something which looks attractive. I think the stock is having a very fantastic kind of an uptrend over the last few months. It's risen up from, I think, if I'm not wrong, 140, 130 levels to now on the verge of breaking the 200 mark. Excellent volumes for the stock, and it looks like that it's now trying to come back into the previous high breakout mode, which is around the 230 to 240 mark for DB Realty. So I would expect at least another 15 to 20% upside over the next 3 odd months for the stock. And then you have fresh breakouts which have emerged from the other pack. I think Oberoi Realties, for example, is the other name which is looking attractive. The stock confirming a minus swing breakout in the short-term charts, and it's now coming back into a retest of the previous moving averages, 50, 100 as well as the 200 moving average for Oberoi Realty. Then Loda is something which is looking attractive. In fact, the stock has been in a range in the last 3 odd months where you've seen many of the real estate stocks falling very sharply. So I think there are a lot many opportunities which are opening up in this sector.
Right. One of the spots that actually looks also one can actually merit to look at is the aviation space, Indigo. That one has actually hit a record high level as well in today's trading session. You have MOSL upgrade coming in for that particular counter, where they're expecting the target to hit. They have a target of about 6,550, which actually is the highest on the street coming in for Indigo. On the charts, Vinay, how is Indigo looking to you?
So after giving breakout, the stock has risen a lot. There is no fresh breakout as of yet. No doubt it is at the all-time high, so trend has been positive. But at this level, risk-reward ratio is not favorable, because after giving a breakout, so breakout level was around 4,700. After that, it has seen only 600 points rise. So existing long position can be held with a trailing stop loss, but new position, I think, should not be taken, because risk-reward ratio is not favorable, and it looks a bit overbought also. So rather than buying at this level, one should wait for support levels to come at the lower side, and then only one can think of it. But otherwise, I would rather look at the stocks which have just started performing in this market, and there are many options available in the F&O as well as the large cap space. So I would hold the existing lot, but not I will not prefer this particular counter for taking fresh long positions.
Okay, already at an all-time high, that's Interglobe Aviation. Let's bring up some of those names from within the hospitality pack. You've got IHCL as well, which is only about 50 odd points away actually from its 52-week peak, that I think of about 890, 895 thereabouts. But Devin, what's the best way to capitalize on the entire travel and hospitality boom now that Interglobe Aviation is a quasi play on hotels too, with its tie-up with Accor?
Well, I think in my viewpoint, most of the companies within this space, they are adequately priced. That is not taking away the underlying prospect that they have. I think they remain absolutely robust and firm. But the valuation wise, I think they are fully priced in my viewpoint. So unless we see meaningful corrections available, either you buy with the price correction in a given market situation, or you buy relatively, I think, after the time correction is completed, then probably I think it makes more sense to buy into the portfolio. As of now, I believe that I think most of the stock in the hospitality sector are fully and adequately reflecting the valuation at which they are quoting currently.
Right, point taken. On that note, thank you so much, Devin, for joining us on the show to give us a take on the sectors that are looking attractive at this point in time, also sharing your rationale for the market. But Kunal, before we proceed, what's your closing trade for our viewers?
So the insurance stocks have started to look very attractive, and SBI Life is something which I would pick at current levels. I think it's a very strong chart, a classical swing pattern breakout in the weekly time frame, as well as a 200 moving average breakout potentially for SBI Life. So looks extremely attractive and would look out for a swing upside of at least another 5% to 7% over the very short term.
All right, that's SBI Life coming in for Kunal. What about you, Vinay?
Go for Patanjali Foods. So stock has given a breakout, symmetrical triangle breakout on the weekly chart, and it is on the verge of registering its new all-time high. So trading around 1920, it's a typical textbook symmetrical triangle breakout. Looks very strong on the chart, and while markets were weak, it was quite resilient, and now it has started participating and breaking out from the consolidation. So 1920 is a level where one Patanjali Foods can be bought. 1770. So this is a positional idea I'm suggesting, not for 1 or 2 days, but yes, for next 2 to 3 weeks, we can think of positional gains here. So 1770 should be the stop loss, and on the upside, we are giving a target of 2145. So this would be my first pick from for a couple of weeks, we can say Patanjali Foods.
Okay, that's a buy call coming in Patanjali Foods. Let's take a very quick break. Look at IREDA, Inox Wind, PNB Housings, not PNB Housing as much, but yeah, Inox as well as IREDA, and of course Bharti. They're quite the star performers today, seeing a fair amount of OI build up as well. We'll take a very quick break. When we come back, the last half an hour of trade this afternoon. Back with closing trades right here on ET now, holding out well across the sector, move coming in. Global markets looking quite strong. It's relative underperformance from, one would say, maybe oil and gas and some degree FMCG as well. Other than that, all sectors are really firing all guns. Realty, automobiles, metals, banks, financials, power, they're all holding up very, very smartly. The breadth of the market as well is quite nice. It's only 10 names which are actually sitting to the negative, with the PI Industries, Godrej Consumer Products, maybe a Berger, HPCL and Max Health. Other than that, it's pretty lively out there, and most of them are in the green. Sunil Subramaniam as well joins in on the show right now. Sunil, holding out well. The long weekend seems to be working well for our markets, because each time you're welcomed by a big move on the global markets. But would you say that the uncertainty on tariffs is behind us now, at least for the equity markets?
I wouldn't say it's behind us, but I think it's definitely calmed down. So I think the markets had, and I think I said this in a previous interaction with you all, I think markets had overreacted as far as India is concerned to this uncertainty of tariffs. So I think all the clarity that's coming, right, whether it's negative for A country, B country, negative for America, whatever happened, it's definitely reduces the uncertainty. And fund managers can plan their allocation. So I think India stands in a very good position here, because I don't think there's any negative or bad news. I know there's this pharma-related thing which Trump might come up with. But apart from that, if you see, I think the position for India, whichever way this knife cuts the cake, right, is going to be favorable for India. So I think to that extent, the markets are recognizing that. And also bear in mind that India specific, there's been a slew of positive things which have been happening over the last, I would say, even a month or so, which the markets had not recognized because of this uncertainty overhang. They started from the budget-related tax giveaways to the RBI's policy being very supportive, to initial targets on the monsoon being very favorable, and India's trade deal talks progressing well. I think there was some leakage of things saying that it could be signed very soon. So I think everything positive. So far, the market had not discounted. I think this latest bit of Mr. Trump rolling back then for the 90-day pause, as well as on the electronic components, he brought down the tariffs. I think all of these, plus the fact that the bond market has made Mr. Trump to also now cool down in terms of the action, because that's finally where it's hit them where it hurts, right? I think he was not worried about the dollar. He was not worried about the stock market, but the bond market, because US has a huge $7 trillion refinancing this year of their debt coming up. So I think the bond market is something that they listen to. And to that extent, I think the weakening dollar is positive for India. Oil at Brent is around $65, again positive for India. So the whole bunch of positive news around India, which unfortunately, as I said, could not be implemented by fund managers taking action. And I think now with the result season coming, fund managers are going to be eager and waiting to take out guidances from the company's earnings and quickly act. So I think you will see this sustained domestic buying now sustaining the market. And FI return, of course, it all depends on the global macro, how that pans out. But definitely, if the actions of the bond market are any indication, it means that Mr. Trump is going to slow down in this whole. I think he's created that major big bank impact. He will now get to the negotiating table and do it, and he will try to manage the situation, which I think is positive from a uncertainty removal for the stock market. So I think overall reasonably good news. And from a domestic perspective, I think it's time to gradually start accumulating the broad market.
Gradually start accumulating, especially when you talk about in the markets right now. And like you were saying, the confluence of factors that are also positive for the Indian markets. One of the sectors also now everyone is watching out closely would be the entire chemical space, the specialty chemical space. You have SRF, Navin Fluorine in particular that are in focus in trade today, because the Citi that's come out with the note, they're saying that they are expecting an increase in the earnings for these counters, given the fact that there is a risk of Chinese firms losing their market share following the US tariffs. And they are expecting an upside of about 23% for SRF in their FY26 EBITDA, while 35% for Navin Fluorine in their FY26 EBITDA. But how should one actually look at this entire space in particular? Because there was a time, Sunil, when they were benefiting with the China Plus One strategy, and it looks like almost 2 years later, this is a similar strategy that is at play for these chemical names.
No, absolutely. And I think that we will be a beneficiary this time of China Plus One, because this time, see, earlier the China Plus One was us trying to snatch from China and to supply to America. Now it's America trying to shut down Chinese imports, and hence the opportunity is now coming from the fact that with the bilateral trade agreement, this is going to be one of those key spaces which I would suspect be a winner from the whole BTA. The only point I should keep watch out for is that China, if US is getting shut as a market, they will try to dump their intermediate chemicals to all countries, including India. So any country other than the US to which these people were exporting, if China is going to compete there by dumping, that could be a threat. Second, China, we have to put strong anti-dumping duties on for Chinese products into India, because a lot of the value chain also comes from China. So we need to protect our industry. So I think both from a regulatory perspective and from a non-US market perspective, one needs to wait and watch all of these. So the US, I think it's only from a US exports perspective, I think this will turn out to be a positive story for the specialty chemicals space.
That's interesting. Some of these names, of course, are flaring up quite well. You've got the likes of SRF, PI Industries, HFCL, etc., looking very strong. Kunal, any of these stocks that you track?
So I think PI Industries is something which I do track, and yeah, I think that stock over the last few days has seen a decent bottom formation on the 3200, 3250 mark. There is some evidence that the stock is now coming back into a bullish crossover mode, moving average crossover mode. That I think could probably propel the momentum for PI Industries. And overall, it's been a consistent moving chart. So I think if we remove this volatility over the last 6-8 months for the stock, we've actually seen PI Industries to be a far more stable chart. So which means that the natural beta of the stock would make a comeback pretty soon. Would be bullish on PI Industries.
All right, so that's the take coming in on PI Industries. Let's take a look at what the IT space is doing in particular, given the fact that, yes, we are now we've kickstarted the Q4 earnings season. We had TCS that had come out with their numbers. Today, IT sector is in focus, 1.5% up move. With the rest of the market, actually, IT pack also is trying to hold on to gain. In fact, we have Wipro that's all set to report its Q4 numbers, and muted quarter is likely that's in store for this IT major as well. What else is in store? Ansh is here with that. Ansh?
So the company had given a guidance of revenue growth in constant currency terms of -1% to +1% on quarter-on-quarter basis for fourth quarter, and it is expected to be -0.6%, which is well within the guided range only. Now, if we talk about IT service revenue, then that is expected at $2,597 million, which is down by 1.2% sequentially. This is mainly because of weakness in manufacturing and some hurdles in European region. But if we talk about total revenue in terms of rupees, then it may rise by around 1.5% to 22,643 crore. Talking about IT service margin, it is likely to slip 20 basis points from 17.5% to 17.3%. Not much, because wage hike was already absorbed in quarter 3. Whereas if we talk about profit, then that is seen at 3,290 crore, seeing a decline of 2.3%. Now, apart from this number, there are 4 key things to watch out for. First is commentary on Q1 FY26 guidance, especially the top line growth. Second is any insight on BFSI and discretionary spend. And third is trend in headcount and attrition. And fourth is update on consulting business. So bottom line is revenue is expected to grow within the guided range, but the main focus would be on management commentary.
Well, yeah, after TCS, curious to hear what we see from Wipro and then, of course, Infosys as well. But bosses of India's insurance companies will be meeting officials of the Finance Ministry's Department of Financial Services this week itself to discuss pressing matters linked to the industry. Expenses of management, risk-based capital, bank assurance, and selection of surveyors are going to be some of the issues that are likely to be discussed. In fact, Anurag Shah, my colleague, is here with all that he's picking up from his sources.
Department of Financial Services officials are meeting CEOs of insurance industry. Tomorrow meeting is scheduled with the CEOs of life insurance industry, and thereafter DFS officials would be meeting CEOs of non-life insurance companies, general insurance companies and standalone health insurance companies. The purpose of meeting is to increase the penetration of insurance where government can achieve the target of insurance for all and the challenges insurance industry is facing. So as per our sources, the issue which will be raised by life insurance companies are related to the risk-based capital, then limit commission and EOM. These are the three main issues that life insurance companies will be raising to DFS. Other than that, general insurance company has a list of a large number of issues starting from the automatic selection of surveyors. So companies want that the previous method of surveyor selection should be continued. Relaxation in master circular of health insurance, that is also a demand. Other than that, general insurance companies want government intervention for standard billing by hospitals and implementation of state level plans should also be helped by government. So these are the main demands of general insurance companies, and the government government officials and DFS officials will discuss with the CEOs of both general insurance industry and life insurance industry.
Just flashing the thank you so much for that, Anurag, but flashing the market, the flash on the bottom of your screen, a monsoon update right now that we will see above average monsoon for 2025. Let's hear out what the IMD officials have to say.
The press release and then the presentation. So I think I stop here. Thank you.
Well, that, of course, is the IMD highlighting their prediction on the monsoons and saying that India is likely to receive above average monsoon rain in 2025. We are, of course, awaiting more details as to what the, anticipated onset of monsoon is going to be like, whether it's going to be on time, a little earlier, considering that the IMD has also predicted extreme heat wave. Remember, we've already had the hottest March for most of northern India and the western region as well. So let's see what the onset of monsoon is going to be like. As of now, they are anticipating above average rainfall for the entire country. Just want to see what are the other details that we're getting right now, and we are expecting rains to be likely above normal, but I think they spoke a little bit about what the intensity as well is going to be. If we can just get on to the next flash. This, of course, is just the first update that we are seeing on the southwest monsoon. We will get more details. They're seen at 105% of the long-term average in 2025. So as of now, it seems like good news. But let's see whether it's an on-arrival or rather on-time arrival or not, and what the intensity and the geographical spread of monsoon is once it eventually hits the Indian shores. But Sunil, you think some leg up for the just about recovering rural play and rural demand? You think that's going to see an impetus once the monsoon kicks in and is above normal, as the IMD predicts?
Yes, absolutely. And it doesn't need to wait for the actual monsoon being normal. I think they say, the cover of good monsoon means the positivity. See, last year was a good year for the rural space because last year's monsoon was also good. Harvests were better. For some reasons, inflation for the urban consumer went up. But for the rural population, so rural demand was the one which was recovering and held up whatever consumption there was. So already the mood there is turning positive. And I think if they are going to know that they're going to sow well, the monsoon is good, I think their propensity to spend will be higher because it's the outlook for the future which decides today's expenditure. So I think it doesn't need to wait for the monsoon itself coming through. I think IMD's forecast, now SkyMet will follow through. If that comes in, the news spreads about this itself, I think the spending will go up on the anticipation of that. So I think, yes, it's a good harbinger for the rural consumption bit for this rest of the year.
Right, so that is the monsoon update. The fact that is the first advance estimates coming in from the IMD where they're expecting an above normal monsoon rainfall for 2025. 105% of the long-term average is what they're expecting. Vinay, that brings me to the next question. If you talk about monsoon, then you talk about also what happens to the tractor makers and the likes of Escorts, M&M, for the matter of fact, even VST Tillers, if I could add to that list. How are you looking at these counters in particular on the charts?
Yeah, so Escorts especially looks attractive as of now because compared to M&M, it looks better as of now. So it is on the verge of giving big positional breakout. So the resistance I see is around 3,300. Once that is taken out, then we can expect a good momentum buying. So compare in auto space and especially the tractor makers, I feel that Escort looks quite strong, and above 3,300, it could extend its rally towards the 3,550, 3,600 zone. So looks quite strong in the auto space, and one can even initiate long position at this point of time in the stock like Escorts.
Okay, that's that and some of those, stocks that would tend to benefit if indeed the rural demand picks up and, of course, the monsoon-related theme. Other than that, today, of course, you're seeing a big move on IndusInd, but I want to see what Kotak is up to. HDFC Bank and ICICI Bank, remember, they're due to report their numbers on Saturday, and both these stocks as well looking very smart. In fact, pretty much an identical move, almost higher by 3% on both these names. Axis as well higher by nearly about 4% or so. Sunil, just wanted to understand what your anticipation is from some of these private banking names, and where do you think leadership is going to come in once they report their numbers?
Well, I think that sequentially they will do better. I think they have a good control over the NPAs. I don't see a problem there. I think that given the news that they are cutting deposit rates, it indicates that they are feeling very, very comfortable on the asset and liability space, right? So if they are feeling that the deposit growth is good enough, it gives that the overall sense of their business is good. So I would read into the rate cuts that they are doing today to say that their numbers should be on track. And I think that those with a good spread of network, right, and the top band of the banks. In private sector banks, I would rather play with the top 5 or 6 names because the comfort of regulatory overhang, as we have seen from some names which have faced challenges, is, I think, definitely less with the top. So I would stick with the top even in this post the result season too.
Right. So look at the top tier private sector companies, even post earnings, or private sector banks in particular is what Sunil is of the opinion. But Kunal, on the charts, private sector banks, there are a lot of the names to choose from. Which one would you choose, and which one is looking good, actually attractive right now on the charts, given the fact that we've seen a good upside also over the last 1 week or so?
See, we've been discussing Kotak Bank, ICICI and HDFC Bank, but I think now it's time for the second rung underperforming names to make a comeback. Now, I understand IndusInd Bank has been in the thick of a lot of negative news flow, but the chart patterns indicate that the stock could probably have formed a decent base at the 600 to 650 odd zone. We're looking at the first day of a decent revival for IndusInd Bank, about the 720, 725 plus mark. This could probably be an indication that from a medium to long term play, the stock could very well be into very attractive price territories to accumulate. For the stock on the longer term charts. IDFC First Bank is something which will start to look very attractive, especially when the stock is back again about the 60 plus mark. There are PSU banking names which I believe are now getting ready for a strong momentum uptake, and I think led by the likes of Bank of India. You've seen that stock doing pretty well for itself. Most of the other names, the likes of Canara Bank, Bank of Baroda, PNB, as well as SBI, I think these stocks could also make a comeback. So now I think we should be looking at a point where we should not be too much heavily dependent on the larger cap private sector banking names, because the breadth would start to open up pretty quickly.
Okay, that's the entire take coming in on the PSBs. In the meantime, today, of course, the story is some of those globally linked spaces which are actually seeing a bigger boom. Sona Comstar, Bharat Forge, Motherson Sumi, these are stocks which are rebounding very nicely. Sunil, do you think while up until now it was all about, looking at domestic facing sectors, maybe one could take a contra call on any of these names, the ones which are more susceptible to tariffs or what happens globally, your Tata Motors, Sona Comstar, Bharat Forge or a Motherson, or would you say steer clear?
No, I would say enter with a staggered approach. Don't put in all your money now. Stagger it over the next 6 months, because what I see is the uncertainty will continue to prevail. There will be days of bad news and there will be days of good news. So there will be volatility. But once you are past this, once there is a BTA signed, everything, I see a huge positive move coming up here. There will be a few losers. So diversify across the pack, but start taking exposure and stagger it. So then, because in a year from now, in a year and a half from now, all of these are going to benefit. The point is you wouldn't know when exactly to have started buying. So I would say start today, but stagger the approach, stagger it over the next 6 months and diversify it across all these international sectors. I think it's a good time to start doing that.
Right. Kunal, I want your view on the pharma space, given the fact there's lots happening in the pharma space. One day the tariff is coming, the second day tariff is not coming, then the tariff is coming not too distant future. What's your take on the pharma space? How should one actually gauge this one? Look at this counter or rather look at this entire space as a whole at this point in time, or you believe that let the news flow settle down a bit?
Yeah, even the breakout is coming and it's not coming for many of the pharma stocks. In fact, seen many of the large cap pharma names being a lot more sideways in the last few weeks. Yes, we call it sideways, even though the range for these stocks has almost been 10%. And, it's not typical of the pharma stocks to have such kind of a wide range, because we know that historically that these stocks are defensive, low beta. They tend to remain into a tight sideways ranges for weeks and for months before these stocks they gather momentum as well as start a decent uptrend for themselves. But many of these stocks have still yet to confirm a breakout of the previous major swing highs, and I'm talking of it from the last 2-3 month perspective as well. So there is a sign of confidence emerging that these stocks have probably the worst for these stocks, at least on the short to medium term charts, is behind. But then you would want to buy confidence, you would want to buy breakouts, and you would want to buy confirmation. That is still pending for large cap pharma names, and that's why you're seeing that in good days of the markets, you might probably have 1 or 2 odd pharma stocks which could do pretty well. But then as a sector overall, the momentum is yet to come back.
Kunal, Tata Motors, that was your contra call last week, right? And now, of course, the stock is moving along with some of the other globally linked auto names. What next do you see on the charts?
I see a very strong revival, Aisha. I think the at least the major part of the worst for the stock seems to be now behind. Price-wise, I think that 550, 575 mark, where we initiated the contra buy for Tata Motors, was a multitude of indicators where the stock had come back to an oversold territory. Whether it's the RSIs which were into deep oversold on the weekly, monthly, and the quarterly charts as well for Tata Motors. 6 or 7 consecutive months of a negative price downtrend, 50% reduction, 50% of a drop for the stock from that 1150 plus mark, which was the high for Tata Motors in August, September 2024. So all of those factors indicate that we are looking at a point where the stock may not just revive 5-10%, but we could be looking at a substantial upside for the stock. And I think the major indicator which I'm looking out for Tata Motors is that mean reversion towards the 200-day moving average. The stock at one point was almost 30 to 35% lower from its longer term moving average. So even if it goes into a mean reversion phase, we could be looking at least a 150 to 200 point jump on Tata Motors further over the next maybe few months.
All right, so that's the take coming in on Tata Motors and how it's looking actually on the charts at this point in time. Sunil, what's your view actually on this entire quick commerce space and QSR space? Because of late, I've read a lot of brokerage notes saying that looks like the QSR space is going to make a comeback. Are you of that camp as well?
Yes, I'm of that camp. The only thing is that finding the winner is going to be challenging. So again, my philosophy is to diversify across all the quick commerce players. But I think overall, the quick commerce market is going to grow rapidly, boom. Who will win? Who will win? Who will give more discounts? Who will incur more losses in a longer term win? That's hard to say. So diversify, because it's a space as a whole which will do well. And I think the market will respect that. So stay invested in that space. That's my recommendation.
Guys, that Zomato is now officially called Eternal. Let's just bring up that stock up for you. So we'll have to get a little used to calling Zomato now Eternal, but 222 is where that stock is. Kunal, eternally strong? Yeah.
Yeah, it's a change, and it's difficult to try and remember these changes in names for stocks. But for Eternal, as well Zomato, I think the charts are becoming a lot more better. So on the weekly charts, for example, we are on the verge of a very big trend reversal breakout for Eternal, where the stock from 300 levels fell down to sub 200 mark, and now I think we are looking at a potential revival of sorts. So my sense is that the stock, say if it crosses levels of 225 to 26 on the weekly basis, we could be looking at a substantial reversal of trend and potentially a breakout closer to that 265 to 70 mark as well.
All right, so that's the take coming in on Eternal, erstwhile known as Zomato. And like Kunal was saying, we all also have to keep up with pace with the name changes, isn't it, Aisha? It's very difficult. You have a lot of companies.
Still Motherson Sumi for me.
Yeah, still Motherson Sumi for most of us actually. That is Samil for you, Samvardhana Motherson. So yes, we have to keep up with the name change as well. For now, Eternal holding up strong, and also the prospects for this one also looking bright going ahead. If you look at some of the pockets of the market right at this point in time, yes, the realty pack is holding on pretty strong. And if you look at the Nifty, the entire construct of Nifty is just ITC and HUL. That's in the negative territory at this point in time. In fact, they're trading just mildly with negative bias in today's trading session. And Sunil, you think now you will look at these FMCG names, given the fact that we are in new financial year, and now you will also have all those tax cut bonanzas also at play. You have the interest rate cut bonanza also that will be at play for in order to benefit most of these FMCG plays?
I would put more of my money on the consumer discretionary space as opposed to FMCG, because I think that the giveaway will be used by people to leverage to buy better products. So whether it's bigger refrigerators, bigger air conditioners, bigger cars. So I think people use it to upscale, because it's the middle class we're talking about. And the FMCG piece, just because I get more money, I'm not going to go and buy more soap or more hair oil. So FMCG, I think I would closely track from their input perspective on the margins to look at how the commodity cycle, they are heavily dependent on crude and the commodities. So that's a good reason to buy FMCG from a margin perspective. But on core demand, right, on FMCG, I think that this tax giveaway will benefit the consumer discretionary rather than the consumer staples. So just for volume growth, I wouldn't go for that. But for margin, I would look at specific companies and buy.
So good having you on the show. Thanks for your time as always. We'll, in fact, let Kunal also go on that note and hand it over to Snehi to wrap up how the closing has been.
Absolutely, what a stellar day of trade coming for us, and we have consistently been above the 23,300 mark. In fact, right now even above the 23,350 mark. Very good day of trade for us. A 2.3% gain is what we've been able to sustain ever since the get-go on the Nifty. 525 points higher on the spot is what we've seen in today's trading session. No complaints at all, absolutely, when it comes to the trading session today. Sensex to a 2.2% gain, slightly off the day's highest point on the back of that Morgan Stanley note wherein they have downgraded the Sensex target to 82,000 from 93,000 earlier, but nonetheless that's not a dent on Sensex, at least today, because a 2.2% uptick and a 1,600 point rally on an intraday basis is what we are seeing on the Sensex today. The broader markets have done even better than the benchmarks today, with a 3% gain coming in on both your mid-cap and the small-cap names. Small-cap index, in fact, outperforming the entire market and looking very good for small-cap, 3.1% gain coming in on that front. Nifty Bank has also done very good and almost 3% gain coming in on Nifty Bank as well, so looking very solid, and almost a 1,500 point uptick coming in on Nifty Bank as well. Advance decline ratio, no surprise, very steeply in the favor of the advances today. On the back of that, India VIX was lower by a whole 18 to 19% in today's trading session. In fact, more, 19.5% cut is what we've seen on the India VIX today. So looking very good, and now we're close to the 16 level once again. So looking very good for India VIX today. Let's talk about some stocks that have done well from the Nifty pack. It's HDFC Bank on the back of that reduction in their savings rate. IndusInd Bank, Shriram Finance, Tata Motors, L&T, Dr. Reddy's, Axis Bank, Adani Group of stocks, the likes of Adani Green, Enterprises Ports, all of these have done well. From the Nifty pack, only 2 stocks in the red, ITC and HUL. So it's the FMCG index that was lagging behind today. But nonetheless, even though it was the least gaining sector, it has closed in the green. And at one point, it was struggling to hold on to the green. But nonetheless, Nifty FMCG is your least gaining sector. 0.3% uptick coming in on the FMCG index. Other than that, Nifty Realty on top of the list is your most gaining sector today. More than a 5% gain coming in on Realty, followed by Auto, Metal, Media, Bank, Pharma, Energy, IT, and last FMCG. That's the pecking order of all your winners in today's trading session. Nifty Realty held up very firmly by the likes of Lodha on the back of their family dispute getting settled. An 8% uptick coming in on Lodha. Prestige has done well. DLF, Oberoi Realty, Sobha, Brigade. All of these stocks have ended very firmly in the green in today's trade. Some other stocks in focus, Havells on the back of their foray into that solar company, the Goldie Solar investment that they have made for 600 crores. That got the market quite spooked about the stock at one point, but nonetheless a sharp recovery for Havells as well. 2.5% higher is where Havells has ended the day. Aircon International on the back of an order win, same for Ashoka Belcon. The entire pharma pack was in focus for good reason. That is Aurobindo Pharma, you have Zydus, lots of other pharma stocks were in focus on the back of drug approvals coming in, US FDA inspections closing. So very good moves coming in from pharma names as well. Also, let's put Dr. Lal PathLabs and Biocon in that list. 2 other pharma and healthcare stocks to watch out for. Bharti Airtel partnered with Blinkit for the SIM card delivery in 10 minutes. So Bharti Airtel was a stock that's up in a buzz today. Adani Green on the back of their operational update. Good set of numbers coming in and very strong gains on Adani Green as well. Devyani International in focus on the back of a Kotak upgrade in both rating as well as target price. All in all, it's been a very good day for us in trade. Most of the broader market has done very, very well today, keeping the breadth firm and strong over the course of the day. And on that note, we've ended above the 20,300 mark for now. Let's see if these gains are sustainable tomorrow as well.